Hello everyone and welcome to Invest to the Moon, where I share my insights on the stock market and the economy. In this video, I will analyze and organize the stock market events that happened in the second week of April 2023 and what they mean for investors. The second week of April was a volatile one for the stock market, as several factors influenced the market sentiment and the performance of different sectors. Let's take a look at some of the major events that shaped the market this week. 1. OPEC Plus meeting. One of the most anticipated events of the week was the meeting of OPEC Plus on April 12, where they decided on their oil production policy for May 2023. The group agreed to maintain their current output levels, despite the rising demand for oil and the recovery of the global economy from the pandemic. The decision was seen as a sign of caution and discipline by the oil producers, who wanted to avoid oversupplying the market and putting downward pressure on oil prices. The market reacted positively to the news, as oil prices surged to their highest level since November 2022, reaching over $80 per barrel. The energy sector was one of the best performers in the stock market, as companies like ExxonMobil, XOM, Chevron, CVX, and ConocoPhillips, COP, saw their share prices rise by more than 5% in the week. The higher oil prices also boosted the inflation expectations and the bond yields, which in turn supported the financial sector, as banks like JP Morgan Chase, JPM, Bank of America, BAC, and Wells Fargo, WFC, also gained more than 5% in the week. 2. Earnings season kickoff. The first quarter earnings season for the S&P 500 is off to a strong start. As of April 14, 2023, 25 companies in the index have reported their earnings results for the first quarter, and 88% of them have beaten the analysts' estimates. The blended earnings growth rate for the index, which combines the actual results for the companies that have reported and the estimated results for the companies that have not reported, is 25.0%, which is much higher than the estimated earnings growth rate of 23.8% at the end of the quarter. The sectors with the highest earnings growth rates are consumer discretionary, financials, and materials. The sectors with the lowest earnings growth rates are utilities, real estate, and healthcare. The positive earnings surprises and the earnings growth rates are above their 10-year averages, indicating a strong recovery from the pandemic-induced slump in 2022. 3. Fed minutes release. The third major event of the week was the release of the minutes from the Federal Reserve's March meeting on April 14, where they discussed their monetary policy stance and their outlook on the economy. The minutes revealed that most Fed officials agreed that it was too soon to start tapering their asset purchases or raising their interest rates, as they wanted to see more progress on their goals of maximum employment and stable inflation. The minutes also showed that some Fed officials expressed concern about the potential risks of rising asset prices and financial imbalances, as well as the uncertainty about the fiscal stimulus and its impact on inflation. The market reacted negatively to the minutes, as investors interpreted them as dovish and complacent, especially given the recent surge in inflation and growth indicators. The market feared that the Fed might be behind the curve and that it might have to tighten its policy sooner than expected, which could hurt the stock market performance. The market saw a sell-off in some of the high-growth and high-valuation sectors, such as technology, consumer discretionary, and communication services, as companies lost more than 5% in the week. The market also saw a rotation into some of the defensive and value sectors, such as utilities, healthcare, and consumer staples, as companies gained more than 3% in the week. To sum up, the second week of April 2023 was a turbulent one for the stock market, as several events influenced the market dynamics and the sector's performance. The OPEC Plus meeting boosted the oil prices and the energy sector. The earnings season kickoff showed strong results from some of the leading companies in different sectors. And the Fed minutes release raised concerns about the Fed's policy stance and its implications for inflation and interest rates. The market saw a divergence in performance among different sectors, as some of them benefited from the economic recovery and some of them suffered from policy uncertainty. As an investor, you should always keep an eye on these events and how they affect your portfolio. You should also diversify your portfolio across different sectors and asset classes to reduce your risk and increase your returns. You should also have a long-term perspective and not get swayed by short-term fluctuations in the market. Thank you for watching this video. If you liked it, please give it a thumbs up and subscribe to my channel for more stock market analysis and insights.